Most traders who trade XAUUSD believe they are losing because of strategy, indicators, or risk management. But in reality, the main reason is much simpler. They are reading market structure incorrectly. Gold is not a normal market. It is fast, emotional, and designed to trap traders who rush decisions. If you read structure the same way you do on other pairs, you will almost always enter too early. In this video, I'll break down how market structure really works on XAUUSD using real price behavior, so you can stop forcing trades and start waiting for confirmation. Let's start with the most common mistake. Most traders assume that every high and every low is part of market structure. They open the chart, zoom out, and immediately start drawing lines everywhere. Support, resistance, trend lines, zones. The result is confusion. When everything looks like structure, nothing actually is. On gold, structure is not about how many times price touches a level. It's about how price behaves when it gets there. If price makes a high but fails to show continuation, that high means nothing. If price makes a low but immediately reclaims it, that low is not structured. Structure needs confirmation. Now let me show you what usually happens. Price approaches a level. Traders anticipate the move. They enter before the break, expecting a continuation. For a moment, it looks like they are right. Then price snaps back, stops them out, and continues in the opposite direction. This is not bad luck. This is how XAUUSD is designed to move. Gold punishes anticipation. It rewards patience. The second big mistake is trading structure without a clear break. A real break of structure is not a candle wick. It's not a spike. It's not a single aggressive move. A real break shows commitment. On XAUUSD, commitment looks like this. Price closes beyond a previous high or low, then holds that area, then pulls back in a controlled way. Without this sequence, there is no structure shift. There is only noise. This is where most traders lose money. They see price touching a level and assume reaction. But professional money waits for confirmation after the reaction. This is the key difference. Retail traders predict. Smart money reacts. Now let's talk about correct structure. A valid bullish structure on XAUUSD starts with a clear break of a previous high, not a wick, a close. After that break, price does not continue immediately. It pulls back. This pullback is not weakness. It is acceptance. The market is checking whether buyers are truly in control. If price holds above the broken level and then starts moving higher again, that is where structure becomes tradable. Not before. The same logic applies to bearish structure. A clean break of a previous low, a controlled pullback, then continuation. If you skip the pullback, you are gambling. If you wait for it, you are trading structure. Why does this work so well on gold? Because XAUUSD is heavily manipulated around liquidity. Stops above highs and below lows are fuel. When price breaks structure and pulls back, it means liquidity has already been collected. That's when the real move starts. This is also why gold feels random to many traders. They enter during the liquidity phase, not during the expansion phase. By waiting for structure confirmation, you automatically avoid most bad trades. You trade after the trap, not inside it. Now, let's talk about psychology. Waiting is uncomfortable. When price is moving fast, you feel pressure. You feel like you are missing the move. You feel like you need to act. This emotional pressure is exactly what the market uses against you. Professional traders are not faster. They are slower. They wait for clarity, not excitement. If you look back at your losing trades on XAUUSD, you'll notice a pattern. Most entries happen before confirmation. Most losses come from impatience. Fixing structure reading fixes discipline. Automatically. This approach is not about predicting direction. It's about aligning with intention. You let the market show its hand first. Then you decide. This single shift changes everything. If you want to apply this to your own charts, start simple. Remove indicators. Focus on one time frame. Mark only confirmed breaks. Less analysis leads to better decisions.